Good morning. It's Tuesday, July 15th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So stocks are advancing here after NVIDIA secured U.S. assurances to resume sales of chips to China. This is lifting sentiment, and it comes on a busy day here that'll also feature inflation data and big bank earnings. Now, much of those big bank earnings, they are being released as I'm doing this video. So we're seeing a little bit of volatility in the U.S. equity markets. The S&P 500 up about 26 points here at 63.37. We outlined yesterday here that 62.80 was really that critical support level, and as that market moved up, the natural resistance point is 63.30. Any kind of breakthrough and follow through that we see after the CPI data could warrant a move on up to about 6,400. At that point, stocks would be severely overextended to the upside. So if you look at Europe and also Asia, well, European stocks, they ticked higher here after Trump indicated that he's open to more trade negotiations with the European Union, and of course those NVIDIA's planning to resume those chip sales here over to China had really boosted those Asian stocks. So you got the S&P 500 rising as well as the NASDAQ rising, and fund managers are turning increasingly bullish as the S&P 500 reaches these record highs here amid confidence that the U.S. will be able to negotiate some of these trade deals. So if you look at 10-year Treasury yields, just ticking down a notch at 4.4%. You also have the volatility index down about 2.5% on the July contract. On the August contract, the contract I'm watching here, down about 1.8%, sitting at about 19.11 on the futures contracts. You do have WTI crude oil down about 50 cents here. That's down just under about 1% at 66.50. Many of you that have been trading crude oil with us here looked at that washout low that we saw after the U.S.-Iran conflict here, and then we bounced back up and we used the Fibonacci retracement here of about a halfway point to unload some of those contracts. So we're going to look at key levels of support as far as re-entering back in on the crude oil market. Now those earnings, you'll have JP Morgan, BlackRock, Citigroup, Bank of New York Mellon, State Street, Wells Fargo, a lot of banks here coming out before the market opens. You also have that CPI data, and after months of little inflation here, CPI probably experienced a slightly faster growth in June as companies are starting to pass along some of those higher costs here from imported merchandise that's associated with the tariffs here. You're also going to see here the option markets. They're betting that the S&P 500 is going to swing about a little bit greater than 0.5% in either direction after Tuesday's CPI data. You're also going to have some Fed speakers coming out. Bowman, Barkin, Barr, Collins, and Logan are also scheduled to speak. So expect to see some rhetoric coming from the Fed here after we do to get that CPI data. So expectations is that they are expecting a CPI report to show an annual core inflation accelerated 2.9% in June. That's going to be the highest since February. So if you're a bear on the market, and JP Morgan outlined this in a strategy report here, they said that the S&P 500 could drop as much as 2% if the core reading exceeds 0.37%, but they only place about a 5% odd on that possibility happening here. So that's outlined in their report. So you do have the bond yields. They are declining about 2 basis points, so about 4.4% here ahead of this CPI. So again, a push above this 63.30, you could see a move up to 6,400. If you're a bear, again, you want to see that market take out about 62.25 where we can wash out to 61.50. You want to see higher unemployment, higher inflation, a major breakdown in the bond market. So pushing onto the metals here on silver, I really keep an eye on the tariffs, the technicals, and the physical flows, because remember, Trump, he did unleash those tariff threats, declaring a 30% tariff rate on Mexico and the European Union, and it all surrounds August 1st if they cannot negotiate better terms. Remember, most of the silver comes out of Mexico. So we're going to want to really watch that particular tariff rate here. We saw silver on that type of news break out over $39 amid some tightening physical supply here. And the implied annualized cost of borrowing the metal for 1 month here has jumped to more than 6% compared to typical rates, which are right around near zero. So that expanding appetite for silver has really left the physical market under strain, specifically in London, not in the U.S. market here, where silver over in London, most of that silver is held by exchange-traded funds, meaning it isn't available to lend or buy. Now your resistance point, look back at the chart pack here. You got the upward sloping line that we ran into yesterday. That's going to be your first level of resistance. 40 will be your psychological level. Then you go back to 2011, 2012. It's 42 to 44 and 48 to 50. So any kind of breakthrough through 44 most likely will warrant that next move up into that next pocket resistance zone. We need to get through $40 first in order to hit the 42 to 44. So what am I going to be watching? I'll be continuing to work adds and subtractions, adding positions on, taking positions off at key levels of support and resistance point outlined by the chart pack and the metal's edge. Remember, oftentimes there's a big difference between making money and being right on a market, and being right on a market doesn't always equate to making money. I saw so many traders, and I ran one of the largest metals trading desks back in 2011, and I watched traders take that ride on up on silver and take that ride back down. And many people had a tenfold change in their account size going upwards here and made life-changing amounts of money, but refused to take anything off the table and rode that position all the way back down. So I have a set of rules that I follow, which involves not only confidence, consistency, but also discipline here. And I have a lot of people ask me specifically about my strategy, my process, and my rules. And the reality is if I gave them to you, having a set of rules that a person does not follow doesn't really matter here. So I find it easier in my particular situation to follow a set of rules here rather than not to follow them. So that's why I use technical analysis, probable ranges, rather than feelings and those technical indicators out there, because you can oftentimes curve fit these indicators to fill what your feelings are having. So pushing on to the gold market, gold is advancing and recovering after Monday's modest drop here. Investors are really digesting the mixed messages with the U.S. regarding the progress with the trade negotiations. So on the flip side, you're an optimist on the U.S. equity markets. Well, you want to see the taco trade. You want to see negotiations happen, the can being kicked down the curve. If you're a bull on the gold market, you want to see those trade negotiations fall apart, a tougher stance on that, and that'll lift that safety trade. So looking at Goldman Sachs, again, they reiterated their bullish forecast on strong central bank buying, maintaining its upward projection of $3,700 an ounce by year end, $4,000 by mid-2026. So you look at the ETF flows, they did add just a bit of gold here yesterday on a small breakout to the upside here, and then ahead of the CPI report. So, and you also saw silver, a lot of profit take place here. So the ETFs, they cut about 4 million troy ounces, and it was the biggest one-day decrease here since May 2nd. So year-to-date percentage change, gold up 9.2%, silver up 7.5%, and again, it was the profit taking that really took hold, and the gold-silver ratio sits at 87 to 1. So keep an eye on the CPI data that's going to be coming out. It's going to be a market mover here. And if you have any questions, you want to open up a futures trading account, you want to receive some of our research, send an email to info@bluelinefutures.com. And remember, futures and option trading, well, it does involve risk of loss, and it may not be suitable to all investors. Good luck and good trading.